Hey everybody, hey traders, Chris Pulver here. Welcome back to the A1 Trading Weekly Outlook. This is for A1 Trading and Pulver Alerts, 1:30 p.m. Eastern Time on Monday the 25th. All I really see happening this week is markets all eyes on NVDA. Earnings are on Wednesday after market. What I'm liking about the Edge Finder setups for this week is very bullish silver, very bullish gold. All I'm doing in those positions with SLV and GLD and gold futures, silver futures, is trading options. I'm selling puts on SLV, I'm selling puts on GLD. I'm not buying at these choppy little levels. I think silver can outperform gold. I think it's a better setup technically. Silver has yet to hit all-time highs. We had 1980 highs and we had 2011 highs at $50 spot price of silver. I still think there's good upside on silver. Gold possibly staying sideways, maybe a dip or a pullback. I'd still like to see it come back and hit the 200 moving average. The Nikkei, I'm still going to remain bullish on the Nikkei until the Japanese yen has a big turnaround, which who knows how long that's going to take. Everything from the FTSE to the DAX still looking pretty good for non-US indexes. US markets, I think, have a critical 30, 60 days ahead. If the markets, so we're trading just off of that big Friday pop on Jackson Hole. This was kind of a ridiculous day. I got burned on an intraday trade. I was trading 0 DTE. I planned on a trade that was going to get me some profit between like $90 to $100 out of the way. And I still got burned when price went up. From the close, price was up 110 points. So it came back down, yes, but it was only about 95 points. I was off by about 5 points on my trade. So I ended up taking about $1,000 loss on Friday, but was still positive on the week. I had like $2,000 going into Friday. I thought I took a pretty safe trade and ended up giving back some of my profit, but still finished a nice week positive. I hit some fresh all-time highs in the portfolio, which is never a complaint. So despite losing the day, I'm kind of still winning the battle, up to some fresh highs for the year. That puts me up about 24% year to date right now. So I'm going to keep grinding. Now, that being said, we are still sitting on some critical spots here, overbought conditions with divergence. I could see NVIDIA earnings doing something like this. We've got NVIDIA trading at 180. We had a pullback just below the 21-day moving average and it's back up. I don't think we're going to go much higher outside of an earnings, maybe gap, and then a fade back down. I think a lot of these stocks, like NVIDIA, like anything that's been ripping since these lows in April, I think we all have to have some pullbacks here towards the 50 to 100-day moving averages. So it's not that far away, but I think that this week on NVIDIA with earnings on Wednesday, whether they deliver or not, here's what I'm pricing out. On the average NVIDIA move, we have about a 7% move, which it translates to about $13. So from trading at 181, we're looking at the upside to about 194 or down to about 160, 166. Now, what I'm doing on my trade for NVIDIA is it hasn't been filled yet because it's going to be a pending order, but I'm going to use these higher earnings pops to the upside. So 12+%, 13+%, 14+%. That's what I'm going to use on my trade to calculate essentially what a high would be and then fade that high. So the trade that I'm posting for this week in NVIDIA, you'll see this in my Pulver Alerts, is going to be selling any type of gap higher on NVIDIA and then trying to get a fade into the next week. So it's not this week's expiration on NVIDIA, but I'm going out to the following Friday, which is going to be September 5th, which is also a non-farm payroll week. If I go to Microsoft, this is kind of what I see as, potentially the scenario on NVIDIA is if we gap up higher and everyone's all excited and the market gets all excited too, I could see this exhaustion gap fading back down. So we have all this hype on NVIDIA, it blasts through on positive earnings, and then over the next week or two, it fades. This was down 9%. So even though we hit all-time highs in Microsoft, it's down 9% from those earnings highs. So if NVIDIA did something similar to that, I could see the market also offering a bit of a correction. So either we kind of stay here at these highs, range, and maybe NVIDIA misses and we drop, well, that's going to bring the market down pretty aggressively. If NVIDIA delivers and the market's not quite sure what to do about it, then maybe it's just a choppy range and it's still very volatile in here, but nothing really goes, there's no direction anywhere, right? But if we blow through earnings and it's awesome and everyone's super excited about it, I could see us gapping higher and then having a move that comes back down into the previous all-time highs and then maybe even coming back into this correction where I at least hit the 50-day or the 100-day moving average, or also just fill up some of my pullbacks on my fib zones. Okay? So I'm thinking that critical spot this next like 30 to 60 days by making sure that the markets they just have to stay supported, not necessarily bullish, right? If the market is supported, that looks like a lot of different things. We could have the market stay supported like this, where it just stays bid, stays bid, stays bid, stays bid. That makes me more nervous for a correction coming later. I'd rather see the market kind of top itself out, maybe go sideways, you know, any type of corrections here, like some type of organized pullback or correction could be then troughed out, and then you can buy the dip to take it back up to the highs. The hardest part about this market is we keep going and going and going and going and going, and inevitably this leads to a break of structure and a much bigger room for error. You know, we start rolling over any type of earnings compression, something happens with the Fed, maybe the Fed doesn't cut in September, October like they're supposed to, or that the market thinks they're going to, so we just have bigger room to pull back, right? So I just think that this is a pretty key spot where we just don't really go too much higher than like 6,500, and the market just oscillates and then maybe allows this 50-period moving average to catch up, or the market gets a little disappointed, shoots down, finds some support, and we'll see if the market buys that dip right back up. It's still, this is so minor. Like, this is a tiny little correction. This shouldn't make anybody nervous, but if we have a dip here and it rolls into something a little bit deeper, that's still okay. There's still a lot of dynamic support in here. You know, I'd be questioning the bull market if we're back down below 57. If we stay above, you know, 58, 59, 6,000, 6,100, I think this bull market is still alive and well. We take it up the highs and still keep grinding higher. It's below 57, I'd say, okay, maybe this is rolling over a little bit more than we thought. Maybe it's going to be a tougher move to get back to those highs again, instead of this whole idea of like, hey, the S&P is going to 7,000. Maybe it's not. So anyway, that's where we're at on the major indexes. You know, NASDAQ is just off the recent highs. You know, SPY is a little bit closer. But an encouraging sign is we did breach all-time highs in the Dow. We had a big rip on the Dow. Goldman Sachs and United Healthcare adding big pops to the Dow. These are also some of the big weights. If you look at the sector performance, go to year to date, and you look at, actually I want to go price weighting on the Dow. Dow, DIA.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
And see where my charts are at. So here's where most of the Dow is coming from. Goldman Sachs is 10+%. It's almost an $800 stock. Microsoft at 7.42%. Caterpillar at 6%. Home Depot at 5%. Visa, Sherwin-Williams. United Healthcare had a big pop to the upside, which certainly helped the Dow. But Goldman Sachs is at $700+. I mean, GS at $740. It's 10% of the Dow. I mean, you don't want to see a financial institution like this dip and dip hard. But this looks very similar to like a lot of stocks. We had a huge fall from February to April. We bottomed out in April. We ripped hard. This is an investment bank. That should be a low beta. And look at this thing. Okay, a beta at 1.51. It's an investment bank that's higher beta than the S&P. But it's up 70+% off these lows. Okay, and again, 50-day moving average, 100-period moving average, previous all-time highs. Like, come on. A low to a high. I mean, it shouldn't be that difficult to see something like this, where you have a low to a high. You can drag a fib and see if there's any type of pullback, something like this. Do we pull back 23%? Do we pull back 30 to 38%? Any of those retracements would be good. So I'm just bringing that up because if I look at the Dow, you know, we just cracked all-time highs, but we just make like a divergent top? Maybe, right? I don't see like my overbought conditions quite like I do on the S&P or the NASDAQ. On the Russell, the Russell also has been blasting to the upside, making some all-time highs. And I think this is still a pretty worthy catch-up trade. If the markets can stay above these moving averages on the Russell, I think we can still make a run to 240, 245 in the Russell. That's the plan. So I'm still long the Russell. I still have shares that I bought back in like the 175, 180 zone. Unfortunately, I covered them early. I covered them around $200. I'm now rolled them up to like 201, 202. And I'm just going to keep rolling them in time because now that my calls are in the money, I'll just keep rolling out and see if I can collect another $50 to $100 every few weeks. So it's an income trade, but I have some bull call spreads that are running with the trend. So anyway, Russell's doing well. Dow has breached all-time highs. S&P is right back to all-time highs. NASDAQ's been struggling a little bit. I still think volatility ahead. I still think you look at all these stocks that have room to pull back. Okay, the 50-day period moving average, look at the low to high, look at some fib levels. They all line up. Like technically, we're just so overdue for some type of pause, minimum pause, maybe a correction. And I feel like a broken record that we've been talking about this, but I just don't want to be blindsided by the market dipping 3, 4, 5%. Nobody knows where it came from. Well, go back to the last 2 months of me talking about it. It's like I'm just preparing, waiting, and this is why I have cash at the ready. So anyway, that being said, I think there's good opportunities to buy the dips. I think this market's going to do everything it can to still just like get a little ventilation, scare out some of the loose hands in the market, and then see if the dip is somewhere like 5 to 10% lower. And then hopefully that is something we can buy, position for, and then take it right back to highs and generate some additional risk on trading. Take a look at the dollar. If we have a pullback in the markets, that should also equate to a dollar bid. So I think dollar goes a little bit higher. Look at this retest of like maybe the 101 handle. Okay, we came up to 100.25, maybe 100.25, maybe 101 before the dollar gets sold again. Maybe a run to this recent high around 101.90. So between 101 or 102, I mean, it doesn't look like a high risk trade. If you were to position for a dollar that you can, buy a breakout here or take a stab at the dollar now, like take a position 1, maybe a pending buy position 2, and then stop out with an ATR below that. If I'm wrong, okay, fine, it's defined risk. If I'm right, we have the runs back up into these moving averages. We have a bit of the risk off trading that might help, target 1, target 2 on the upside. If you want to just wait, so it's two things. If you want to buy the dollar, I don't mind buying kind of now and having a nice tight stop loss for some upside profit. If you don't want to buy the dollar and you want to focus on selling the dollar, then I like selling really small. Sell small, sell small, and sell small, and stop loss would be up here. So it would be all small trades, looking at the moving averages to hold dynamic resistance, and if it goes back down, take profit. If it comes back up and then goes back down, take profit. Goes up here, hits the moving average, closes back below it, goes back down to retest lows, take profit. Okay? If you want a better setup, just wait. Just wait for this trend line to break. Let price do its thing. Hopefully it gets back up to 101 or 102 to sell it nice and high. Okay, so I just think it's still like a range trade on the dollar. I'd rather sell it nice and high. If you're going to buy it, the asymmetry is favorable. If you're buying here, you got a pretty tight stop here to go up on the dollar. You go gold and silver, like I said, gold is just totally sideways and has been since April. We're in like a 3 to 4 month range on gold. All I'm doing is selling puts down below the 200 moving average. It's for income. I'm still holding my shares of GLD and looking to see if this thing will break and go higher, which I think it will. It's just going to be a matter of time. Maybe a pullback towards this 144, 200 moving average, and then we buy that dip and go up to higher highs. Silver, to me, still looks better. Any type of pullback in these dynamic moving averages, I'm still buying it, and my spot price target is all the way to $48, $49. Bitcoin had a rough weekend. Bitcoin was down. We're still finding some support in here between these moving averages. I don't want to see Bitcoin really breach 100K. If we come down below 100K, then I'm guessing that the NASDAQ's going to be lower as well. But if NASDAQ stays pretty buoyant and resilient, S&P says the same thing, then Bitcoin's probably going to find some support here between like the 110 to maybe 105 zone. There's just some good moving average support in there. And then you can follow along with your correlated assets. I mean, I have IBIT running, I've got FBTC running. MicroStrategy is sitting off the 200-day moving average. We had a big bounce on Friday, but it's still kind of right back. It gave back some of those gains on Friday. I want to see if we can get back above like $390 to $400. Obviously, if we make higher highs in Bitcoin, I want to see if MicroStrategy can also make a run and make some fresh highs as well. Coinbase, big retracement gap. I don't mind Coinbase with some levels down here. Trying to sell some puts below like the 150 handle. But I'm not trying to get a ton of exposure right now on just naked puts. Like I'm going to do some type of ratio spread. I'm going to do some type of strategy that keeps my deltas relatively low and gets like a high probability setup. Ethereum, I believe we did breach. Yep, so we did breach all-time highs. I just got filling the queues. Okay, good. We just breached all-time highs in Ethereum, but we are sitting here with overbought conditions and divergence. So we've had a pretty nice, what looks to be a 5-wave move. If I just measure this out. So wave 1, 2, 3, 4, 5. If we go, ABC correction, I think Ethereum pulls back a little bit. Okay, just a little bit, not a ton. I like Bitcoin better than Ethereum in all honesty. And why? Because we've had such a good run. Look at the comparison between Bitcoin and Ethereum. This thing has been just an absolute, just cliff. But what am I seeing here? I'm seeing that we have oversold conditions with a lot of divergence. It wouldn't surprise me to get Bitcoin back into the bid that Bitcoin looks like a better asset than Ethereum. As far as there's stability in Bitcoin, I think there's less volatility in Bitcoin. And given the fact this ratio has been favoring Ethereum for the last, 4 months, Ethereum's been a great catch-up trade. But I think as far as overall market cap positioning, I like Bitcoin better. That's just my personal opinion, and my holdings are more tilted towards Bitcoin after I took profits in Ethereum. And so I think Bitcoin maintains a better bid, and Ethereum probably corrects a little bit more. Okay, what else? Copper, I'm not going to trade copper after that big tariff distorted move. Japanese yen, I'll be waiting to see if anything good sets up on the dollar yen, Swiss yen, which I talked about in these last couple weekly videos. Let's see here, DAX still pushing towards, buying the dip is fine. If you buy the dip, here's a fib, right? Here's some moving averages. I like buying the dip on the DAX. FTSE, same thing. This is running hot, man. Hasn't hit the 50-day or 100-day in a while. Any pullback to dynamic support looks pretty good. Previous all-time highs at 8,900 it's like, just give us a dip. Please give us a dip. If we don't, it runs away. The way I'm participating in this, I have exposure on DAX and FTSE with SCHY. SCHY is a non-US ETF. So it's Asia and it's Europe. Okay, that includes the UK. This has been a pretty good recovery since the April lows. This ETF is up 25%. So it's not bad. It's not going to be everything because obviously it's diversified. There's a lot of holdings here versus just buying the FTSE. But still, I think it's a good way to play it versus being long, just exclusively the FTSE, which I'd like a dip to add some more exposure. I'd like some pullbacks. I'm just not getting it. Argentina, meh. Brazil looking better off the 200 moving average. Latin America, same thing, making some fresh highs, which is encouraging. MAGS, because it is trading just like NVDA, we're sitting here nearing these highs again. Earnings this week on Thursday. Wednesday after close, so we'll trade it on Thursday. Does NVIDIA pop MAGS higher? Does NVIDIA push it lower? We'll find out. Apple hanging in there at 228. Amazon filling that earnings gap. Broadcom, decent pullback off the highs. Google pokes all-time highs and still going. I've got some income trades running on Google. These ratio spreads, I think I got most of this trade done and no more exposure. Let me check here. Google. I have a ratio spread, the 135 by 130, 280. It's up to, it's up 87%. Honestly, it's more cost effective for me rather than making the extra $37. I just take the profit. So probability of profit on this one is pretty darn high. It's at a 130 strike. The odds of it coming down to 130 is about 2%. So I don't have to do anything on the trade. It's probably going to be full profit, but it's not a bad position just in case something rolls over to collect most of that credit. So good trade there on Google for pulver alerts. Meta, Microsoft, off the highs. Meta also off the highs a little bit. Netflix, I'd like to see Netflix pull back to the 200 moving average before I start adding some exposure. All about NVIDIA earnings this week on Wednesday after close. Tesla doing pretty well at 347. I'm just selling premium on Tesla, and I've got some expirations on the 29th that I have to take care of. Bonds, not really a bid. I think it'd be curious if we have a dip in the markets, do the bonds head up? Watch the yields. If yields go down, do bonds go up? Right? Last week on Jackson Hole, yields went down a little bit. FOMC, it hasn't really budged. I think this is the one unfortunate thing that everyone thinks that the Fed's going to cut rates and these yields are going to change dramatically. They're probably not. I think the yields are going to be sticky between low 4s and mid 4s. 4.1 on the downside, maybe 4.5, 4.6 on the upside, and the long end of the curve isn't going to change that much. So I just think traders need to be very careful on what they expect to see happening with rates getting cut maybe September and December. Possibly there's a third cut sprinkled into October, but we're going to find out all this stuff coming September. But I have a feeling that the long-term yields aren't going to change much. Okay, let's get into some currencies here before we wrap up the video. Currencies, Aussie CAD. I'm still holding long Aussie CAD going back towards 93.50. I'm still holding Aussie Swiss, and hopefully this is setting up for some type of reversal pattern, low to high, maybe a little wave consolidation in here, and then another symmetry push to the upside, get back to fill this pocket and find some past support around 5,600. So I still like Aussie. So I'm still holding it long. It's positive swap. Aussie yen, no trade. Aussie New Zealand, my longs are doing pretty well. My 108.50, my 107.50 buy orders are long. I'm looking to hold them for profit target 111.50. Profit target 2 is up to the 1,400 zone. I don't mind taking partial profits here, maybe reducing my trade, but letting it try to run up here towards maybe 1,400. Aussie dollar, it's if you're willing to dollar cost average, open space towards 68.50. CAD Swiss, can't find a freaking bottom yet, but if we do, I like this one heading back up, breaking the trend line, getting under like 6,400. Look, it's all about identifying a price pattern here. I don't have it yet. I'm looking for a bottoming pattern. Once I get it, I'll look at 3 and 5 wave moves and I'll measure them out, but I need to see if I can confidently call a bottom. CAD yen, no trade. Swiss yen, like I talked about here in the last couple of weeks of these outlooks, if we get a break of this trend line, break, retest, and then go, I want to see if the Swiss yen can head way lower. I could be dead wrong, but if I'm wrong, I'm going to be stopped out pretty quickly. If I'm right, this thing could set up for a 2,000 pip move to the downside with maybe risking less than 300 to 400 pips. Euro Aussie, I'm going to hold off on. Euro CAD, I mean, it could be pulling back to these like shallow moving averages. That's about it. I'm not calling the top there. Euro Swiss, I'm still holding long from 92. Euro Pound, if we pull back in these dynamic moving averages, buying these dips and see if we go higher. Euro Yen, Swiss Yen, keep an eye on both of those. I think Swiss Yen's a better setup than the Euro Yen. But if you can spot a bearish price pattern, I like this trade back down. If the Japanese Yen is going to get stronger, Euro Yen, Swiss Yen, and Dollar Yen all setting up for some really good, stronger Yen trades. It's just, I think we need a lot of confirmation. Euro New Zealand came right back up to hit these highs. Not a bad spot to sell nice and high with some tight stops. If you're paying attention, that's a good resistance point. If you're not, no worries. Euro dollar, I think we have maybe a pullback back into this trade's done and over with. If you have a pullback into 1350, maybe 1.11, I'd still like to buy some dips here to get euro dollar to head back up to the 118. I'm going to stay out of this for now. I think it's just choppy, but if the dollar gets stronger, pulls this euro dollar back, I'd like to see if this will find some support, and then we can trade it back up to 118. Pound Aussie, maybe a pullback into here. Maybe a pullback in this like 50618 zone and then heading up into the same range highs at 2.1. Pound CAD, nice little cluster here. If you're selling high, I would put a stop loss around like 88.30. Make sure price doesn't close above that. If it holds and we have resistance and it fades back down, there's a pretty good reward to risk setup there in Pound CAD. Not bad. Pound Swiss, I'm still holding long at 107. Pound Yen, no trade unless we break. If we sweep these lows here at 195, maybe a break of those lows, pull back here, and then a big head and shoulders pattern to the downside. I could add that one to the list of, hey, the yen pairs look good. Let's see how they line up. Pound New Zealand, we had a breakout trade right here, break, retest. That would have been a great entry around 2.27. If you missed it, it's too late. Don't worry about it. If we hit this like 2.33, maybe a good spot to sell nice and high. Otherwise, don't worry about it. Pound dollar, I'd like to see a pullback towards like 3,100, 3,000. I think euro dollar is a cleaner trade. New Zealand CAD, this one doesn't bother me at all. We've got a nice pocket right in here. If we fall a little bit lower, I'm going to scoop up like 79.80, 7,900, 78.50. I'm going to scoop up some of these deeper pullback levels and try to trade it back into this pocket around 8,100. No trade on it right now. I'm still holding a long position. I'm just saying, like, as far as taking a trade that is non-FIFO, so I can buy with different trade sizes, I would buy this level, and near this low, and see if this will come back up into this range. So, New Zealand CAD, Aussie CAD are trades that I love to kind of dollar cost average into because they're so efficient. They hit a lot of pivots. Any pocket inefficiency that I see, they tend to find it. So I'm just going to hold long right now, and if I can buy the dip here, I'll add to my longs. New Zealand Swiss, we are coming back into these 2025 lows. Again, a nice inefficiency. It'd be awesome to see a nice bottom hold. If we can hold the bottom here, come all the way back up here towards 49.80, that could be a double bottom, get back to 49.80, measure this move to the upside, get into some buy zones up to like 53. Time will tell, but I need to see a bottoming pattern over here. If we don't see a bottoming pattern, then no love yet. New Zealand yen, no trade. New Zealand dollar. If you're willing to dollar cost average, or just wait for a trend line. Honestly, wait for a trend line right here. If it breaks this trend line, okay, gets on the right-hand side of the trend line, maybe heads back into open space, I could see New Zealand dollar heading back to like 63 or 63.50. But if it stays on the left-hand side of this trend line, don't force the buy trade. I would be willing to buy it nice and low and have this offer support. We have a low risk and high reward setup. So the setup could be good, just wait. I'm just gonna put a trend line here and monitor it. Okay, dollar CAD. I'm just gonna wait to buy this thing around 3,600. No trade in the dollar CAD. If I buy 36, I gotta be willing to buy 36 and 30, probably 34 and 32. 36, 34, 3,200. Small trades, see if the dollar CAD can head back up to like 44, 4,500. Dollar Swiss, we're on the right-hand side of the trend line. If I can confidently call a little bit more of a bottom here, I think we head back up into like 85 or 8,700, but a little bit more time's needed. And then dollar yen, still a choppy trade. Eventually, I think this sets up for a monster head and shoulders pattern that's going to get us to 120, but who knows how long it's going to take. So this will continue to be like wait and see, try to confirm it, and then we'll get a trade later. So, all right, that's a little bit of top down. I like some trades. I like silver, I like gold, I like following the edge finder. We've had some interesting runs in the indexes right now. There's a little split between what's moving and shaking, like Russell's playing catch up, Dow's breaking all-time highs. Qs are lagging right now. All eyes on NVDA this week, Wednesday after the close. Okay, so expect some volatility to wrap up the month, and then we come into September, we're gonna have non-farm payroll, inflation data. So look at your edge finder for your CPI numbers. So if you want to look at your inflation data here, check your CPI numbers. You check your labor market for next Friday for non-farm. All this stuff will matter to see what the job trends are doing. Okay, this has been the big concern with the Fed, is that we're starting to see softer job prints, and that's why they're going to justify cutting. So are we cutting into a weaker economy? We cut into a potential slowing economy. It hopefully helps versus like, well, the cutting when we're already weak, we're cutting when things are already bad. This is like the too late Fed argument. So time will tell. But the big change last week was the market only expected like a 70% chance probability of cutting. Now it's up to like 83, 84%. And we still have more data for the market to digest. The Fed is still not convinced they're just going to go heavy dovish. They still might just, maybe cut once, maybe wait and see. And the market will kind of take that in stride, month by month. So anyway, we'll tackle it this week. I look forward to seeing you in the markets. Thanks for watching. Take care. Bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.